Great. Welcome, everyone. Maybe before we begin, I see that everyone is here already. I can give the floor quickly to our great panelists. So maybe Corinne, off to you, so you can start, and then we can go with the order of sitting.
Thank you very much. Can you hear me?
Yes.
Oh, great. I'm glad. Okay. Yeah, thank you for having me. And I'm a full professor at the law faculty of the University of Basel. In addition, I'm an adjunct professor for private law, civil procedural law, and financial market law at the University of Zurich. And I teach, I research, and I act as an expert for public authorities, for courts, and for private individuals in the areas of private law and monetary, currency, and central bank law, as well as on cross-cutting issues between private and financial market law. That's more or less what I'm doing.
Yeah, hi, I'm Carsten from WIPOC. WIPOC is a law firm that is specialized on tech firms, so we consider ourselves as partners of game changers, and we are actually strong in the field of venture capital, startup businesses in particular. But we also have a practice group that is dealing with fintechs or banking and financial regulation. That's the group that I am part of. I've been around in financial regulation for the last 13 years, advising one of the first e-money licenses in Germany, and we're dealing a lot with, I'm dealing a lot with payments and crypto, virtual currencies and the like. Happy to be here and be part of the panel. Over to you, Simon.
Hi there, my name is Simon. I'm head of digital assets at Hauck Aufhäuser Lampe, which is a rather small German private bank that got the idea to move into the digital asset space for some reason. Before that, I was for 2 years at Deutsche Börse at the same job, basically, and before I was at Commerzbank, also doing some blockchain transactions over there.
Hi everyone, my name is Patrick. I'm Director for EU Strategy and Policy at Circle. Circle is a global financial technology company based in the US, mainly known for being the issuer of USDC and Eurocoin, a euro-denominated stablecoin. We're also a happy member of the DEA, so I'm very glad to be here today.
Thanks, everyone. Welcome again to the discussion. Perhaps let me start with a little quote and ask you who am I quoting? It's going to be a little riddle. So, stablecoins represent a significant innovation in digital currency space, but the regulation is crucial to ensure that they do not become a threat to financial stability or consumer protection. Anyone has an idea who that could be? It's a neighbor of ours right now, current, from a big tall building outside of the center. Yes, it's Madame Christine Lagarde saying that. I think similar to Madame Lagarde, no one has any doubts that regulation is crucial for the stablecoins industry. The more I'm happy that we can today discuss this problem. So we'll touch upon a couple of questions. We'll start with where do we actually stand with stablecoins, then look into the regulatory challenges, and then perhaps look into more the MiCA regulation, recently agreed in the European Parliament, the Commission and the Council, and soon to be adopted in April. But I'm a lawyer myself, and perhaps before we start going into the actual questions, we've heard a lot from previous presentation about the current development of the markets and interesting use cases. Yet, I would like to still ask, what is actually stablecoin and what pretends to be one? And perhaps, Corinne, from your academic point of view, how do you understand the notion of stablecoins? And do we have a clarity of what is one and what seems to pretend to be a stablecoin?
Yeah, thank you. So let me say something about a potential definition and the taxonomy, which has to be distinguished. So as far as I can see, we do not yet have any universally agreed legal definition what a stablecoin is. However, in its ideal form, I would say that we do already know some essentials. I would enlist 5 or 6 of them, which really qualify something to be a stablecoin. So one is being a representation of a value or of a right. And second, it has to be crypto-based, so stored and transferred on DLT and with encryption, with a built-in value stabilization mode, That would be the third aspect. It has to be designed to be used or actually used as money. So in the ideal form, maybe it's just a payment function, but ideally it should be money-like. Then denominated either in a virtual unit of account or a state currency unit. And lastly, issued by private sector in distinction to CBDC. So in some, you have privately issued, crypto-based representation, stable, fiat or virtual money-like values. So that would be a quite lengthy, but I think, accurate definition. To say one word just to the taxonomy, there is a simple one, just looking at the stabilization mode, which distinguishes between algorithmic, so not backed at all, then crypto-backed and asset-backed. However, when we later will talk about regulation, it will be important to have some more refined taxonomy because depending on the structure, this comes along with different risks that could be addressed with different regulation forms. So here we would have to look at the issuer. Who is it? Is it identifiable or is it a DeFi environment? Is it licensed or is it not? Then backing. How is something backed? Is it not backed at all? Is it collateralized by currency, commodity, something else? And lastly, whether there is a redemption mode or not. So that would be my takes on definition and taxonomy.
Yes, quite a lot of things. We already talked about stabilization mechanism a little bit before, but I'm quite curious to hear what Patrick has to say about this as a representative of a stablecoin here. Do you agree with what you just heard? Do you have a different take of what stablecoin is actually?
Yeah, we're actually not a big fan of the term stablecoin because it sums up so many different designs and concepts into one term. We speak of what we issue as a payment stablecoin or as tokenized cash, and that's very different from a lot of designs out there. I think just to add on top of what has been said, I think for me personally, I think a stablecoin just is a form of internet native fiat money that is built on public permissionless blockchains. And I think that's a key feature. And then obviously for our term payment stablecoin or tokenized cash, the key differentiator here is that it is fully reserved by either short-term treasuries or cash, and that it is mainly used for payments. Because if you look at where stablecoins are used today, that is very, very different.
Yeah, perfect. Carsten, how do you differentiate stablecoins from existing form of digital money?
Yeah, I guess that's pretty simple. So Corinne mentioned one of the features as being DLT based. So all that has to do with crypto is the basic differentiator. We have the existing payment rails in the banking industry, in the payment industry, which work without DLT. You actually would need to have certain add-on advantages for stable coins that go beyond that in order to justify their application. But there are, of course, and on the previous panel we heard a lot of those advantages. So there is certainly a market for, if I may use the term, stable coins. And Corinne mentioned the payment function. Yeah, so on the legal side, the definition was really close to e-money. Yeah, there's the same features, but the DLT element is the key differentiator.
Key element, DLT is the key element. Do we know everything about stablecoin? What it is? What pretends to be one, Simon?
At first, I would agree with Patrick that it's a such broad term as cryptocurrencies. Yeah. And most of what is thought to be a cryptocurrency is no currency, obviously. Yeah. So it are tokens within an ecosystem that are having a value or bearing a value. It's a bearer instrument, basically. So with regards to stablecoins, it's difficult maybe to discuss like the broad thing, like the cryptocurrencies. It's very difficult also to discuss these stablecoins. Yeah. I think what is kind of structurally interesting is that for me, something like a stablecoin is, especially if it's on a public blockchain, a digital product, and that's important. Payment processes have been digital for a long time. That's nothing new. And if somebody aims to digitalize the process again, it's nothing new either. Yeah? But getting the product digital is very, very important, and I have an example for that, if I may. Back when I was at Commerzbank, we did how we called it cash on ledger, which was commercial bank money on a blockchain. So commercial bank money can be a stablecoin as well, by the way. It's the most secure one, by the way, as well, because it's also the most secure way of private money yet. We used it, for example, for Daimler, where trucks received money on the steering unit of the truck to pay for loading the truck, or fueling, if you'd like to. And this really solved the problem of fraud by fueling cards. So cards where you pay for the fueling, because if you pay for the fueling by the cards, you cannot distinguish if the driver is using it for his own private car or the truck, because they take the same fuel. But if the truck receives the digital money and can pay via a wallet that is on his steering unit, you have to rip off the steering unit of the truck to pay. It's impossible. Yeah? So for that reason, really the truck pays and not the driver. And this is only possible because the product gets digital and not the process.
This sounds very clear. Okay, let's talk about the regulation then. Let's dive into this. So back to you, Corinne, maybe. What do you think? What do you think are the most notable initiatives currently around the regulation of stablecoins? Where do we stand in terms of regulation?
When speaking of regulation, we have to take into account that stablecoin touches a whole range of areas of interest. That's the first thing I'd like to mention. And to just name a few, monetary sovereignty is a big issue, financial market stability, integrity, also known as AML and CFT, consumer protection in every aspect. So these would all kind of potentially being covered by some kind of regulation. Then if we take it as a matrix, you have several levels of regulation starting with an international level with standard setting bodies. There you have the BCBS, so the banking committee, the Basel Committee on Banking Supervision, looking at banks and banking activities. Then the IOSCO, rather focused on securities, etc. And then the BIS Committee on Payments and Market Infrastructure. And all these standard setting bodies on a very high level are also reflecting right now what kind of regulations they have already issued or should be adopted, show some interdependencies and overlapping or lacunas that have to be closed, etc. So that is the international level. And then, of course, you have the national level, and there is really, really a lot going on. And I would just like to mention a few examples. We will later talk about EU and MiCA, so I won't address that one here. We have, for example, Japan, who has already passed a law that enshrines a definition of stablecoin, and that provides standards for investor protection. So the focus is rather on investor protection there. If I'm looking at India, and if I got it right, so it's there rather an aspect of anti-money laundering regulation on the one hand side, and on the other hand, preparing already the way for a future digital central bank digital currency. We have the US. There is draft stablecoin legislation pending, and as long as it is pending, the market has to cope with what I call regulation by enforcement. So recently we had, others are probably more familiar with the details, but for example, Binance US stablecoin issuer Paxos has received a Wells notice, as you may have heard, claiming that the Binance US dollar was an unregistered security. And we can see several such bodies now claiming competence for aspects related to stablecoins. To stop, just mention Switzerland, as I am for Switzerland, we do not have any specific regulation with regard to stablecoins. So we just try to solve it with the existing ones, which is not just an advantage, and sometimes it leaves us with a lot of uncertainty. Although we already have some stablecoins, one is issued by a financial market infrastructure, an exchange, one by a bank, licensed bank, and one by a licensed actor, just subject to AML regulation.
Thank you, Corinne. It really shows that how fragmented we are when it comes to the stablecoin space around the world.
Yeah, absolutely.
Yes, let me turn towards you, Carsten, now. It may be a little bit provocative, because from what we just had, it clearly is there's no clear legal certainty, but is there any legal certainty as to the rules govern stablecoins? And if yes, then are they maybe on a national level, or where do we look for them?
Well, yeah, that's a good question, which I would answer with a definite yes and no. So there's no legal certainty, both currently on the national or European level. If you look at the term stablecoin as is, yeah, because it's not a clearly defined term and it has so many different functionalities. But if you look at a specific matter and a specific coin, and we're speaking about payment token in particular, then of course there is regulation that is clear. So we have a clear definition for e-money. We have a clear definition of a unit of account in Germany. We have a clear definition of crypto assets. So there are different applicable rules that govern stable coins, but you need to look at the respective features of the coin and its use and application.
Okay, Simon, how does it look from your perspective again here? Do you agree? Do you see any other places where you can find legal certainty, where you can, when stablecoins, to whom we are going to get in a moment, where they can look for some kind of clarity as to how they can function?
I think you can find legal certainty for stablecoins anywhere in the world if you're good at designing it. And if you're bad at designing it, you'll have a legally uncertain product because you are a bad designer. And there is already money everywhere in the world. I don't see a reason why you're not able to put money on the blockchain everywhere in the world, because there's already money everywhere in the world. Yeah? It's a question of design and architecture. And I personally think, for example, because I know it, as previously described, we have done that already in 2018. So since then, I know it's possible in Germany, fully with legal certainty. You just have to have the proper license to do it, yeah? Because creating money is a commercial bank business. That's the core function of a commercial bank, is to create commercial bank money and to manage it. So every commercial bank can issue money on the blockchain, which you can then call a stablecoin. We didn't want to call it stablecoin back then either, by the way, because it's a rather fuzzy term. Yeah, but in general, it's absolutely possible under the existing e-money directive within the EU for every commercial bank and every e-money institute in the EU to issue a stablecoin. Full stop.
I see, Carsten, you want to react to this?
Yeah, I wanted to react because Simon mentioned banks only in the outset, but clarified that it is also applicable to e-money institutions. So fully agree.
Perfect. I need to now go to Patrick with the right design and legal certainty. Where do we stand when it comes to regulation, stablecoins? Are you happy with where we're heading with the regulation? And do you have this legal certainty that Simon was mentioning?
So I would fully agree with Carsten that it's key to distinguish between money issued by a bank and by a non-bank. So in Europe, we have that e-money directive, the concept of non-banks issuing funds and building payment services on top of that. And that's something that, for example, doesn't exist in the US on a federal level. And that would be very helpful for issuers like Circle, for example. So currently in the US, for example, USDC is regulated as a stored value under money transmission statutes that are basically a state affair. So we have money transmission licenses in every single US state, registered with FinCEN as a money services business. But what we're missing is a federal framework for non-bank, basically payment services. And hopefully, Corinne mentioned that there's pending legislation right now in Congress, and we're very optimistic that we will see something coming forward this year. Coming back to this part of the Atlantic, I think MiCA brings a lot of regulatory clarity for companies and issuers like Circle, because it basically updates the concept of e-money and makes clear that you can issue that form of money on a blockchain, even a public blockchain, in the form of an e-money token. So it's great that, once MiCA is formally adopted next month and then enters into force, there's a 12-month implementation period, that there will be clear technical standards, guidelines on how issuers have to set up operations, set up their business, their issuance, redemption, custody, reserve, etc., in order to be able to comply with all those requirements. And we are very much looking forward to basically going down that road. Have just recently announced last week in Paris, France, that we applied for both the e-money license and the crypto asset services licenses. So I think Europe could become really a role model on how to handle the regulation of those assets.
You're jumping a little bit the questions that I would like to ask, which is great, but we'll get to MiCA in a moment. But maybe before we do that, let's talk a little bit about the regulatory challenges. Simon, you already mentioned about the design, but I'm wondering, what do you think is the biggest regulatory challenge for stablecoins at the moment?
Again, I would come back here a bit to the point that I think if you have the right tools, you can do it already. But I think most of the people that are doing it don't have the right tools, to be honest. Yeah. So managing the issuance and in general also the general management of money is something which is highly regulated already. But it's a lot of work. And it costs a lot of money up front. If you want to, you can ask, if you want to found a bank here in Germany, it will be quite costly. It will take a lot of time. It will take a lot of brain power to set up all these with the AML requirements, with all the requirements that come from the European level that were already mentioned as well. So it's just a lot of work.
Maybe just one comment on that. It's also not perfectly fit for purpose, because those, I mean, at least how we define stablecoin issuer broadly, those issuers like Circle, for example, they don't engage in credit activities, credit services, in banking-like services. So to just say there's banking regulation out there and there's theoretical legal certainty out there is easy to say, but it's not the concept that is fit for purpose for most companies out there.
Yeah, that's why we have the EMI license, which is a lighter touch form of regulation for those specific institutions. And it is specifically designed, for example, companies that don't engage in lending business, which have risk from defaulting borrowers, where we have very tough legislation in the banking sector due to the capital requirements regulation, which is very, very complex, how to calculate own funds for banks that engage in that business, but that doesn't apply for EMIs, and it will also not apply in that specific form for issuers of e-money tokens under the new MiCA regime. So I think regulators try to accommodate for that. I agree it's not perfect. Yeah, you have specific challenges that arise from a complex regulation that still exists, but the general concepts, I think, are understood more or less. Yeah.
Great. Corinne, let me rephrase this question a little bit before I get to you. Let's talk about regulatory challenges, but let's take into account also the different perspectives. So we have the issuers, we have also service providers, we have retail users. Where do you see the biggest regulatory challenges, considering those different perspectives on looking at the stable coins in the central point?
What I find particularly challenging is the fact that stable coins, and I do not just talk about these modest formats, they have just been described as a new type of e-money, bit more complex forms, large scale forms, significant forms. They do not fit perfectly in one of these pre-existing regulations, as has already been mentioned. They come along with structures resembling a payment system, so sometimes, and therefore would fall under certain FMI regulation. You have other stable coins that have some similarities to money market funds or banks, and fulfilling, however, not all their characteristics. Then you have security-like natures or aspects that could have to be regulated. So because they are primarily used for investment or speculation purpose, even if they had been designed to be used as a money. And since now, as we have seen, each jurisdiction tries to tackle these challenges in their own ways, we will see considerable frictions with regard to cross-border transactions, and that is one aspect. Another one is quite interesting to see that, as you said, Simon, I think that for banks, and that banks are well suited to issue all types of money, be it crypto or not. I agree with that on the one hand, but on the other hand, I think that also banks will have to change business models to some part. If I think of tokenized deposits, that does not necessarily be the only form of crypto bank money. Could be some kind of a custodial coin, for example, that should be issued or could be issued, and this would transform some part of the banking activity, which could have impact on regulation. It will be difficult how to address user certainty, consumer protection aspect. So I see a lot of challenges. There would be more, but hand over to you again.
If I may add, yeah, I fully agree. Banks have to change their models, yeah, to do that. That's why so many don't do it and they struggle, because that's also quite a lot of work. It's not only that the new players have to get more into the banking business, the banks have to get more into the crypto business. They need a custody function and stuff like that. That's not so easy to do. Completely agree. And I think also coming back to your point before, where you also said some are designed like monetary funds, others are designed like securities, I would completely agree, but come back also to the point, it's a bad design. And Libra was a very good example. I had a speech beginning of week at the Fund Congress in Mannheim, where I picked up this example because it was a fund, right? It was a monetary fund buying all these stepped instruments by the states, making them, by the way, one of the largest debtors for states, which is kind of a politically interesting development that would have taken place. That's why they tried to prevent it with MiCA, which worked perfectly fine, so all good. But it was simply a very, very, very bad design. Yeah, because they designed a monetary fund. And so if you would distribute it to clients, you would have to comply with all the regulation that comes with monetary funds for a good reason, because they would need to also really be regulated in such a manner exactly to protect the people. Yeah, because it is a fund. For that reason, you need the regulation of a fund. If it was money, it would be different. But Libra, for example, was not designed as a bank.
Yeah, I know this from practical experience. They have always tried to avoid regulators and said, okay, we can convince, for example, the FCA in the UK that we are not issuing e-money. Yeah, it was, if you're looking from outside of it, bad communication, bad management, I think, in the way that they've set up such a huge product where you would think that you need to consider the respective regulatory implications on the various levels that Corinne mentioned, monetary policy, political-wise in particular, and also the already existing regulation. And if you state that you don't require a license from looking at the outset, that was a surprising statement. Yeah.
Great. Let's move then to our favorite MiCA regulation. Patrick, you already mentioned that it could be an example for others, if I understood you correctly. Maybe you can tell us a little bit more about your perspective on MiCA and why you consider it so, because that would be my question to everyone. Would you consider MiCA as an example? But please, Patrick, you can start.
Yeah, happy to. And just to start, maybe a fun fact, I think MiCA is actually probably the biggest legacy that Libra had on our world, because it was largely inspired and accelerated by that project. And the asset reference token category was built with exactly the Libra project in mind. Really curious to see what we'll see there in the industry and in the market. I think, as mentioned earlier, I think MiCA has many benefits for the industry and could become a role model for other jurisdictions out there. I think the main benefit being obviously that it is a harmonized binding framework. So it allows issuers like Circle to get licensed in one country and then to basically passport the services around the union to that enormous single market. And that's exactly what's missing, for example, on the other side of the Atlantic, especially for an asset that is globally fungible, like a stablecoin. We need harmonized regulation, or at least some kind of aligned requirements and provisions. So that's point one. Point two is, as we mentioned, it creates the path for legal certainty, and I think that is key for us and to many other responsible actors out there that want to provide their services on a regulated basis. And now, for the first time, we will have clear requirements on what to comply with. And actually the next 12 to 18 months will go even further in that. They will develop the technical standards and guidelines, so the European supervisors will do that. And once we have that, I think the road to regulatory clarity will be in place. There is obviously challenges, as with any regulation. There's specific challenges with respect to single aspects. For example, with everything that happened in the recent weeks with respect to banking failures and vulnerability in the banking system, we, for example, think that the requirement to hold at least 30% of the funds with a credit institution is potentially a risk factor. And we are advocating, and have been doing that for years, by the way, to be able to hold the cash portion of the reserve with the central bank directly. And hopefully that will be an option in the future. And then there's a few other specific challenges, just to add a few general challenges. One is that e-money tokens will be e-money, but also a crypto asset at the same time. And that raises very tricky legal challenges in terms of payments and funds, etc. And the second challenge, or a more general challenge, I touched on that already. Stablecoins are inherently global and fungible. And there's always the challenge if you go too far with regulation as one jurisdiction, that this might have extraterritorial implications and impacts on other jurisdictions. So we have to find a model for a global stablecoin issuer like Circle that it can get regulated in different jurisdictions, and with having those regulations aligned, because we run the risk that if we follow all the requirements in one jurisdiction and those are not aligned with others, that might break the fungibility of the business.
Perfect. Carsten, let me come back to this taxonomy that was just mentioned by Patrick. What do you think about the taxonomy adopted by MiCA? Is it answering the needs of the market? We have asset reference tokens, e-money tokens. What would you say about it? What's your perspective on this?
Yeah, I completely agree with Patrick that it creates legal certainty, but the challenges are, of course, there, and one systematic failure of the design of MiCA, I think, is that e-money tokens are dual regulated under MiCA. Yeah? So you have this regulation for e-money tokens, and at the same time you say more or less the e-money directive applies as well, while with all other European directives like MiFID or for insurance companies or for other sectors, there are explicit exemptions, and it's hard to see why financial instruments governed under MiCA are exempt and e-money is not exempt. Yeah, what's the difference between an e-money token one-on-one exchange against fiat currency that is technically provided on a distributed ledger against the same function provided by traditional means, and why do we need that additional regulation, for example, for the creation of white papers for those instruments that serve the same purpose as the other ones, and have more regulation for e-money tokens that are put on the distributed ledger. That's hard to see why that should be.
Perfect. Simon, let me make it a little bit more challenging for you. We heard a lot of good things about MiCA. I tend to not believe that everything's perfect. So what would you say could be done better? What could have been avoided and is done by MiCA badly?
I would say that's not with the money side to a large extent. For me personally, it's that they don't include collectible NFTs. That's a personal opinion. I think it exactly takes away legal certainty for an instrument that is really not regulated today. I mean, with regards to the e-money, it is already regulated, so you can already do it. Also via blockchain, and then if MiCA comes into place, you have to apply additionally the MiCA obligations, basically. NFTs are not yet regulated. Now they become regulated, but collectible ones, which are the major part of it, won't get regulated. That's, for me personally, the worst part of MiCA. Thanks to France for that, because this was politically influenced by France. But it's okay. You have to make compromises, right, on a European level.
Understood. Okay, Corinne, what do you think about this? Do you agree with other panelists when it comes to MiCA as an example for other jurisdictions?
it is truly nicely put together all the weaknesses and strengths of this draft, I think, or no, it's no longer any draft. And I would particularly agree with what first has been said. It's not just a question of putting into force some regulation, but there has to be some auxiliary measurements, one of them being access to central bank money in order to have a truly stable reserve. And it's extremely interesting. Yesterday in Switzerland, we had the money market apéro of the Swiss National Bank, and it was for the first time, to my knowledge, that one of its members of the chairs stated that they considered just in a project, not really in order to put it in place already, but to create some kind of a pledged reserve accessible for future issuers of stablecoins, just as a, not even a proof of concept, I think it's just a project. But that's a first step, and I really welcome that. So that could be something that should have come along with the MiCA in order to really put something in place that is usable.
Great to hear that. I think we have a couple of more minutes in case there are any questions in the room or online for our panelists. Maybe give you a couple of seconds in case you're very shy. Please don't be afraid. What would you like to know about regulation of stablecoins?
There's a lawyer on the panel. You'll never get any time else free legal advice. Yeah.
In case
I
there
charge
is one
you for that,
question.
Simon.
Yes. We got one question over there. If
Yep.
I'm this, great.
Yeah, hi, my name is Nick Tullner. Thanks for that fantastic panel. Was very, very interesting. Question for Patrick. Would it be of interest potentially for Circle to apply for a banking license in Europe for their stablecoin?
Yeah, I think, as mentioned, luckily in Europe we have that e-money framework, and I think that fits way better with what we're doing. It's important. I mean, many people don't know that, although it's quite transparent everywhere. We don't lend out any money. We don't hypothecate the reserves. We don't do any like credit business. We're not involved with that. So that's why I think the traditional banking business is not like the perfect fit for us. But as mentioned, the non-bank payment services that are integrated into the e-money concept.
Well, and just to follow on with that, with one question. So what would happen if, for instance, you take the reserves, place them with the central bank, so you get that access to the central bank account, and then interest rates go negative? What happens then? Because you can't, my understanding of MiCA is that you can't pass on the negative interest to your token holders. So you're paying negative interest on your reserves with the central bank. You can't pass that on to your token holders, and essentially you go bankrupt.
I mean, that's a question that is independent of the central bank access, in my opinion. It's the same if banks pass on the negative interest rates, it's the same thing. So the access to the central bank window or accounts is really a matter of reducing counterparty risk, reducing credit risk that we saw playing out over the last couple of weeks. With respect to the business model in general, obviously it's easier in a high interest rate environment. But it depends then on every single company and issuing business. We have other business lines, infrastructure services, etc. So we, as an e-money institution, hopefully in the future, won't be able to pass on neither positive interest rates nor negative ones, and will, in those kinds of environments, need to come up with other revenue lines that we already have and that we might build out in the future.
Yeah, and that's what I wanted to add. I mean, even in the banking sector where you had that issue for a long period of time, there was a discussion of whether banks can pass on negative interest to their consumers, and they didn't call it interest, yeah, they called it a deposit fee. So there are certain ways to get around this redemption requirement to pay back the notional amount, but of course it depends on how you apply that. But in specific situations, I think if you yourself need to pay a negative interest, then regulators will understand that, yeah, in order for that business model to be viable, there needs to be some form of passing on those costs. So.
I like the elegant formulation that you said you neither pass on the negative nor the positive effects.
It's prohibited by MiCA.
Yeah, all good.
Great. Great. Do we have any other question maybe in the room? There is one question over there. We got 3 more minutes, so we need to be rather brief with the answers.
Hi, this is Manuel. Thanks for this panel, very interesting. To be honest, even though looking into e-money regime and the MiCA, I cannot 100% wrap my head around the dual regime. So what is your opinion on this dual regulation? Will everything that falls under e-money today will be excluded from MiCA, or do you think for certain products both will apply in future?
Yeah, that remains a bit to be seen. I think there are certain exemptions, and the both regimes are at least partly aligned. For example, there is a specific reference in MiCA to the exemptions under the e-money directive. So those parts are aligned, but as I mentioned, for white papers, they are not aligned. And I think it's going to be something that market participants need to comply with for the time being, up until the point in time when those things get corrected.
Great. Okay, maybe perhaps we have 2 more minutes, so I have time to ask you one more question, very brief, but please, a couple of sentences of answer. What is the left to be addressed after MiCA in terms of regulation of stablecoins? Maybe, Corinne, you can take this one first.
Well, looking at the regulation, there is one thing that we haven't mentioned so far, and which is striking to me, and I hope I didn't get that wrong, but if we have this limitation for non-euro denominated stablecoins, for example, there's this a limitation, if I'm right, of about 200 million, I think. So this reminds me of some kind of a foreign exchange control rule, a very old-fashioned one. And I wish that in the future, at a certain point of time, we can let go such kind of regulations, because those kind of rules have always been put in place when currency was weak and when an authority didn't trust really the attractiveness of its own money. And I hope that competition between legacy state money and private sector initiatives at one point will lead to a solution without such limiting regulation.
And I need to stop you there to hear also Carsten and others. What do you think?
Yeah, I agree. For what remains open is, in particular, I think the technical standards. There's a lot of devil in the detail. If you look into the various mandates that, in particular, the European Banking Authority needs to address, for example, with respect to the calculation of reserves, that's a major issue in the way that market participants structure their business model, and those questions remain unresolved so far, but of course will be addressed.
Simon?
I think the regulator has done his job. It's now the job of the institutes to follow up and build a business upon it. But maybe there are some banks, especially smaller ones, that want to look into it.
Perfect. Patrick?
Yeah, as mentioned, on the European side, finalizing the technical standards, and on the global scale, making sure that those regulations are compatible with one another for those global fungible assets.
And with that, we can, I think, close. Thank you very much once again.
Thank you, Stefan.